What's up, ladies and gentlemen? The question for today's video is, what do I do with my 401k now that I've left my previous employer? Well, I'm glad you asked, because maybe you left your previous employer, or maybe you're starting your own business and you're leaving your employer to take on that entrepreneurial endeavor. And so it's a big question that comes up in a lot of my meetings with my clients and newer clients, because you maybe have this investment account or retirement account as a 401k, 403b, 457. Maybe even you have a pension plan that they're telling you that you can take a lump sum from. But in any event, whatever type of account it is, you have a decision to make. And that decision from a spiritual standpoint is going to determine your level, your management level within the kingdom. So God is looking to see if you're going to manage his resources appropriately. So we're not always just talking about your cash flow on a day-to-day, monthly basis. We're also talking about your investments, because God wants to see how you're managing the investments. Money is always supposed to be moving. So if you remember the parable of the talents, those gentlemen ended up doubling their money. And then the guy who didn't double their money, he said, at least you should have put my money in an account where it was getting some kind of interest. So money, when you send it out, is always supposed to come back with more value than when you originally sent it. So God is looking to see how you're going to manage this money that he's allowed you to accrue. Because remember, everything on earth belongs to him. Yes, you tithe 10%, but the 90% belongs to him too. Your house belongs to him. Your car belongs to him. All the companies that make up the stock market belong to him. And that's the paradigm that you need to have. So in Ecclesiastes 3:1, it talks about that there is a season for everything. And there's a time and purpose under heaven for everything. And so this may present an opportunity where you have to make a decision on what to do with your 401k. Maybe you have had it at this company for 5, 10, 15 plus years, and you're comfortable with that company. But is it the right decision for you to leave it there? Is there an opportunity for you to increase the management ability of that money, such to the point where that money, if it's being now sent out, can come back with even more money than what it's done at its current location? Proverbs 16:20 says, whoever listens to counsel is wise, but whoever rejects discipline is foolish. So if this is a topic that is a challenge for you and you're just not sure, maybe you have a lot of money in those types of accounts, and so you're just not sure what to do, this is where you need to seek out wise counsel. But I tell you that even in Genesis, when Joseph and Pharaoh were talking, they got together and had a meeting, because Joseph told him, he said, listen, there's going to be 7 years where things are going to be good, but there's also going to be 7 years where things are going to be bad. And 7, based on numbers, is a spiritual number. It means the number of completion, right? So it means that God is completing something. So in that story, what you see is that Joseph employed a strategy that allowed them to manage the years of plenty appropriately, such to the point that when the years of famine showed up, they had more than enough than what they needed, but they had so much that they were able to generate additional revenue because they were able to service the people that came to them. And what you'll notice is, if you read that story, is that they increased their business, because most of the people that came to them, they gave them stuff, they gave them money, they gave them cattle, they gave them their homes, and then eventually they gave them themselves to be their slaves. So even during the years of famine, Joseph ended up even better at the end of the years of famine than he did at the years of plenty. So the question is that going to be the same case for your retirement account? Even Jesus says, who's going to count the cost of building a tower before they actually build it? And so your 401k and all those different types of accounts generally are for retirement purposes or for financial independence. So you need to be able to have a plan that allows you to see how that money can impact your future goals, especially if you're trying to become financially independent or retire at some point. So with all that being said, there's 4 things that you can do when it comes to your retirement account that you have at work. Number 1, you can do what's called a rollover. And this is called a direct rollover, meaning that it has to go from custodian to custodian, meaning that if you have a 401k at Vanguard or T. Rowe Price, it has to now move to an account at Fidelity or Charles Schwab, right? So when you're doing a rollover, it's going from 401k, especially if it's a traditional 401k, from a traditional 401k to a traditional individual retirement account. If you have a Roth 401k, then it's going from a Roth 401k to a Roth IRA. If you have after-tax money in your 401k, that money should not go into a traditional IRA, but it should go into your Roth IRA as a rollover. All right. And so that way, when you do that, you don't end up having that money get taxed twice, because most people aren't diligent enough to monitor the after-tax money that goes into their traditional IRA so that they can tell the IRS what's taxable and what's not. Okay. Now, so rollover, you want to do a direct rollover. When you do that and you're leaving the account, the 401k account that the company has set up for you, and moving it to an account that you've set up for yourself that is attached to your social security number. When you do that, the universe of investments are open to you. Why do I make that point? Because with a 401k, your investment options are limited. Most of the time, most 401k plans are limited to a certain number of mutual funds. But when you end up having an individual retirement account, you can invest in stocks, you can invest in CDs, you can invest in bonds, which means that you're able to invest in a security that gives you a stated rate of return. And at the end of that time period, you get your principal investment back. But while you had that investment, you got money from it. All right. So that's the big benefit of moving to doing a rollover. Also, too, you're able to add a third layer of beneficiaries to your traditional IRA account. Most people always think that all you have is a primary beneficiary and a contingent beneficiary. No. You actually have a third layer as well. Okay. Now, the next piece is that you can do what's called take it. Take it means that you're doing an indirect rollover, meaning that it's going from your 401k directly to you. I generally don't recommend that you do those types of rollovers because it's going to cause your taxes to increase substantially depending on the size of the account. So let me give you an example. Let's say you're making $100,000 and you have $100,000 in your 401k and you decide to take the money. Well, now, because that money in the 401k has never been taxed before, it's going to show up on your tax return as additional income. So it's going to look like instead of you making 100,000, it's going to look like you made 200,000. So it's going to bump you into another tax bracket. That's one of the main reasons I don't recommend that. But if you need the money, you got to do what you got to do. The other option, which is number 3, is to move it. You can move it to your new employer, or you can move it to the new retirement account that you set up at your business. And that way you have the lump sum that you can continue to add to through payroll deductions. And then the last piece is you can leave it at the old 401k company. If you're going to leave it there, you have to make sure from a spiritual standpoint that you're still going to manage it. And hopefully you've been managing it up to this point, because that's what God wants to see. How are you managing his resources? All right. So if you're not going to look at that account, at least on an every 6-month basis, a semi-annual basis, then I recommend that you take that account and you give it to a financial advisor who is going to employ a strategy and monitor it for you. All right. Because that way, if your portfolio gets out of balance, that advisor can then rebalance it. When there's other investment opportunities that are available, he can then take advantage of those opportunities. As opposed to you working on your purpose, you may not be able to identify opportunities as often as he may be able to. And so this is just listening to wise counsel and properly managing your investments. Pay somebody for the things that you're not that diligent at or you don't have a skill set for. All right. So these are some of the things that you can do with your 401k. All right. Or 403b, 457. Roll it, take it, leave it, or move it. I'm the Moses of Finance. I'll catch you down the road.